All right, so let me bring Abigail Alabi, who is the Sub-Saharan Africa Industrial Goods Analyst at Vetiva Capital Management, into the cement conversation. Good morning. Thank you very much.
Good morning. Thank you
We
for
appreciate
having
it.
me.
And these are very tough times, as it were. So, from a macroeconomic point of view, and someone who dips every day into the industrial goods sector, of which cement is the bulk of what your research and all that playbook really is, with the whole issue of gas, diesel, coal from these cement manufacturers, what do you think is the reality of today's business environment for cement in Nigeria?
I mean, cost-wise, it's really, really ridiculous. It's been a very, very challenging one for them. The cement industry has significantly battled with high costs for the last few years, and it has been worsened by the whole geopolitical crisis with the price of coal. So cement producers depend significantly on coal and gas. And we have seen that given these geopolitical tensions, we have seen the impact in the price of coal. Also, since supply disruption also affect both prices as well for coal and gas. And since both of them are USD linked, we have seen also the impact of FX fluctuation also impact the prices of that as well. And given the fact that the spare parts and also machineries and raw materials like gypsum are also influenced by the FX issues, we have seen the input cost for cement producers increase in general. And as a result, we have seen them try to protect their margins and also maintain profitability by increasing prices. So those are majorly the things that have caused increasing cost for
on the streets when it comes to the end users. But again, some folks will argue that, look, we have just few players in this industry, so and they have capacity. How do we resolve that? Do you think there's a bit of a yes, that we need more cement producers in Nigeria?
Oh yes, surely we need more cement producers. Currently, we operate on a oligopolistic structure in Nigeria, so where we have just three main players dominating the market. And because of that, consumers do not have a lot of variety to choose from, so they have just either Boa Cement, Lafarge, or Dangote Cement to pick from. And as a result, oligopolistic market structure gives an increase or gives the ability for producers to increase prices. And also given the fact that there's whole cost factors involved, they have to maintain profitability as well. So I mean, yes, we need to increase the entrance or new entrance to the cement industry, and that can be done through so many other ways. We need regulatory reform that could also encourage new entrants to the market. And one key thing is having or make it so for cement producers, there are lots of hurdles, lots of difficulties in obtaining licensing for production as well. So we need to at least streamline or make this production process or this licensing process very seamless for these producers. We also need the government to also improve competition as well by creating incentives for new entrants to come in, because cost-wise it's not very, very beneficial for them, because already existing players already enjoy economies of scale. They already have a brand recognition. They have a very, very established distribution network. So it may be very, very hard for new entrants to come in to be able to compete with these existing firms. So I mean, we need a lot of regulatory reforms that would encourage these new entrants.
I got that point. I get that point. Again, we want to. You're asking for. You're talking about further liberalization in the cement. But again, you look at prices: 13,000, 15,000. Then they went inside the room with the ministers. Works, housing, industry, investment, and a few others and associates say, look, we're going to reduce prices to 7,000 or 8,000. Is this government fixing prices, or is it an industry agreement in a manner of speaking?
So it's an agreement, but the thing is, the sustainability of this agreement is heavily dependent on the cost production or the cost issue. So the ability of these cement producers to maintain this lower price is heavily dependent on the ability to control costs.
So lower prices can't be forced on them.
Yes, so lower price can be forced on them unless the underlying cost issues are being addressed. So once that is happening, until those cost issues are being addressed, or if those are not addressed, we'll most likely see cement prices go back up. So the main, or to be able to encourage the long-term value or long-term sustainability of these agreements, the government has to come in and also address these underlying challenges, as well. They already said they were going to do. But until this is done, we'll most likely see cement prices go back up to what they were currently, or what they are currently.
So what do you make, therefore, of the Minister of Housing and Urban Development saying that perhaps he's going to ask the government to open the gates again for cement importation?
I mean, in the short term, it can can give lots of benefits, especially for the consumers. So causing an influx or increasing importation of cement. For the consumers, it can reduce price and also create or increase affordability of housing. But for the industry, it can have a negative impact for local producers because once there's an influx of cement from the other markets, one, it will cause decline in their sales and also their profit, and potentially also lead to job losses. And also this also...
And revenue to the government.
Yes, revenue to the government as well, because cement players contribute a large amount of tax as well to the government. So that will also affect profitability for the government too. And also that will also affect the long-term prospects of growth for the cement industry. We have seen over and over again that we have seen the cement producers going to the market to raise funds. We've seen lots of investments into the industry. So that will affect investments into the industry once they see that the long-term growth prospect for the industry is a bit dim or is a bit bleak.
Because some of these folks have done commercial papers in hundreds of billions of naira. Dangote Cement, Boa Cement, and what have you. They've gone to the market and all of that. So we need to think this through. I think we should think this through very carefully.
Yes, there's also an issue of quality as well, also the risk of dumping. Once we have the inflow of, because if it's not regulated, we most likely have an inflow.
Everyone is regulated.
Yes.
The folks are going to be smuggling all kind of things through the borders and call it cement.
And that would affect the safety and the durability of our construction in the housing industry, in the entire real estate. So that's a key risk that we also need to look at before allowing this increased imports of cement into the industry.
So it's something we need to handle very, very carefully. So, well, you said it could be the solution. What are the issues here that folks will need to face? And I'm talking about ordinary Nigerians, to talk about the oligopoly, the spillover impact of high cement prices. The minister says an increase in essential building materials means an increase in the prices of houses. Do you think affordable housing remains a mirage for us in Nigeria?
I mean, currently we have the housing deficit of about 22 million homes. And given the fact that cement prices have been increasing, this will affect affordability for the low and middle income household. I mean, it's a known fact that cement is a very, very key instrument in construction. So once you see high increase in cement cost, that will also translate into high cost of housing. And given the fact that we have a low and middle income class, they will not be able to afford this. And also in the real estate sector as well, these higher cement prices also translate to higher construction costs for them. And this also discourages new investment or new construction projects because, I mean, the incentive to build more housing units will not be there. And this also affects the supply of affordable housing. Already, like I said, we have deficit of about 22 million homes. So this will affect supply and also worsen the housing deficit that we have currently. So, I mean, higher cement prices will definitely go a long way or will definitely affect the the housing industry and also the real estate activity too.
So for the listed cement makers, Boa, Lafarge, the big three, in a manner of speaking, do you think these price increases will translate in any way to perhaps what your target price is for these stocks on the NGX? Do you think in any way it should translate to more dividend? Because if cement prices go higher, it goes to the bottom line, or do you think operational cost is going to eat up these increases, no matter how sweet it looks to them? Like right now, the end user thinks that the cement makers are making more money, but they say it goes to cost and a few other things. So do you think at the end of the day, it has anything to do with their balance sheet at the end?
Oh, yes. So because this cost or this increase in cost will affect their bottom line, they have also taken steps to also make sure they reduce cost. For the players, we have seen them also trying to transition into alternative fuel. So they are looking for locally sourced materials for cement production. And we've also seen them also try to switch from diesel trucks to CNG trucks. And diesel trucks are a lot more cheaper than diesel trucks. And that will also affect their operation cost as well and also show up their margins and also affect profitability. So, I mean, that will also feed into their bottom line and also increase the fundamentals of those companies too.
Very interesting times ahead, but again, I would just put it as interesting because it's tough times. But
yes, really tough times.
Yeah, let's just say it's interesting.
We're still looking to see how this will pan out in the long term. I mean, they have a meeting in the next 30 days to see how this agreements will have worked. So we are still looking how this...
30 days?
Yes.
That's still like a stopgap measure.
Yes, so we are still looking, so they are going to assess the impact of this new
If they can do 8,000 for just about 30 days, so and then we'll come back.
Yes, so we'll come back to the table and at least assess.
So technically a consumer shouldn't just think that this is over.
No, it's not over yet. We're still trying to assess the impact of this. I mean,
I was thinking it's over.
Oh, it's not over because the cost is still going to increase.
Unbreak my heart. Abigail Alabi, thank you so much.
Thank you for having me.
Head of Sub-Saharan African Industrial Goods Research and Analysis at Vetiva Capital.